If you've found this video, it's probably because you are looking for the lowest interest rate at the moment because you're concerned about where interest rates are going for your mortgage. In this video, I'm going to give you 2 strategies that you can get the lowest interest rate and save on your mortgage. So maybe you're coming from a low interest rate currently and you're about to go to a higher interest rate because you're coming off your fixed term period and you're concerned about the change that's about to happen. I hear you. Really common situation at the moment. Or maybe you're already on what you consider to be a high interest rate and you're feeling the pinch at the petrol station. Maybe you're feeling the pinch at the supermarket, and you're definitely feeling the pinch in your wallet because of your mortgage repayments. And so you're probably thinking that the solution to this problem is to find the lowest interest rate. But do you know what? That's not the solution, and I'm going to tell you why. My name is Jeff Elias. I'm the founder of Futurebound, where we help people to get mortgage and financially free. So the reason why the lowest interest rate out there at the moment is not the answer to this problem that you've got is because, do you know what? Here's a little secret. All the main banks, their interest rates are all about the same. Okay, there's not actually that much difference. They're all doing about the same cash contributions. They're all doing about the same interest rates. So there's not really much benefit of just changing banks from going from one bank to another bank purely for the reason of chasing the lowest interest rate. And of course, once you get that, what you consider to be the lowest interest rate, it's only going to be for 1 or 2 years. And then you're going to have to change banks again to chase another lower interest rate. And when you change banks, it costs money. There's fees, there's legal fees, there's break fees, there's having to repay cash contributions. So it's really not a very effective solution to just be chasing banks to chase lower interest rates. Now, wouldn't you rather have a solution where you can be in control of your situation, where you're the one calling the shots and you're not like a leaf being blown in the wind because of what the banks are deciding to do? So if interest rates go higher, you know how to play the game. If interest rates go lower, you know how to make the most out of this situation. Control is what will give you peace of mind and will allow you to sleep better at night, knowing that you've actually got the lowest interest rate for your situation and that you've got a plan in place to go forward much faster. So let's get into the 2 points that you can implement in order to get the lowest interest rate for your situation. Right, point number 1. Are you using banks' products to their full potential for your situation? I'll explain this point in a story. So a couple of months ago, I had a client that would set his mortgage up for him, and he rang me up and he was in a bit of a tiz and he was a bit excited. And the reason that he was a bit excited is because the floating interest rates had just gone up. He just had a letter from his bank saying that the floating interest rate was going up. And he said, Jeff, I'm paying 7 point something % now, and this is really expensive. And don't you think we need to now fix that loan, or maybe consider changing banks or doing something, because I don't want to be paying 7 point something %. So my response was, slow down, take a breath, let's do a little bit of maths, and let's see what your effective interest rate is. Okay, maybe you've heard that term of your effective interest rate, maybe you haven't, but I'm going to explain it a little bit to you about that now. Okay, so when we did the maths on this guy's loan, and the type of loan that he had was actually an offset type loan, and I knew that he had other bank accounts with money in them that was being linked to his offset loan, and when you do this, you lower your effective interest rate. Okay, so I said to him, let's check your effective interest rate and let's see how much interest you're actually paying on that loan. And guess what? Once we actually did the maths and we checked it, the effective interest rate that he was paying was actually 0%. Exciting, right? 0%. I said, why are you worried about what the banks are doing with their interest rate hikes? You're paying 0% interest. Okay, so there might be the actual interest rate of 7 point something %, but your effective interest rate is 0%. It literally does not get any better than that. Okay, now, was his whole mortgage on 0%? No, it wasn't. That was a portion of his mortgage. He had a couple of other loans as well. But the way that you can look at it, if you look at the mortgage as a whole, you might say, well, I'm paying 0% on this loan. I'm paying 6% on these 2 loans over here. So on average, my overall interest rate is 5%, for example, right? And that becomes quite a more palatable interest rate and not so expensive, and it makes you feel a whole lot better about life because you realize, hey, I'm actually paying quite a low interest rate. Okay, so that's how you can achieve a low interest rate, just by using banks' products to your benefit. The second one, and this one is really, really important and probably what I consider to be the most important way to get a lower interest rate. And that is to have a proper mortgage debt reduction plan in place that has been written by a professional who knows what they're doing so that you can actually have a plan for paying your mortgage off faster. When you pay your mortgage off faster, you pay less interest. And so as a result, your interest rate is actually not as high, plus you're using all the bank's products as part of your plan to pay the lowest effective interest rate. So this is something that we do for our clients. We look at their situation, we analyze their situation, and we give them a plan and we show them exactly how to structure their mortgage, exactly how to pay their mortgage, how to set things up. And as a result of doing that, they are no longer being blown in the wind by what the banks do, all right? And in fact, when the bank's rates go up, they don't have to care that much. And when the bank's rates go down, they know how to make the most out of their situation. And overall, their effective interest rate is actually much lower than what you would think in a market like this when interest rates are quite high. Now, if you'd like to have a plan for yourself, or maybe you're thinking, I need to find out more about what I can do with my mortgage and how I can get the best effective interest rate for my mortgage, then I really invite you to click on the link and book in a 15-minute chat with one of us in the Futurebound team. Once you do that, we can find out a little bit more about your situation, we can ask a few questions, we can see what's important to you, and we can come up with a plan of how you can beat the bank and how you can be in control of your mortgage, in control of your situation without having to be concerned about what else is happening out there in the interest rate world. So click on the link and book in your 15-minute chat. And the reason why you want to do this quite quickly is because our calendars get really booked out in advance. We're really, really busy. And if you're wanting to get some advice soon because you've got a refix rate rolling over soon, then you want to get in early. I usually suggest that people book in at least 2 or 3 months before their fixed rate rollover date, but even sooner if you want to discuss and you just still want to make a plan for your situation. So click on the link, book in with us now, and we look forward to finding out more about you and helping you with your mortgage soon.
For more financial tips, advice, and education, subscribe to us on YouTube and don't forget to hit that notification bell.